Yeah.
What up?
Oh, they ain't
What's
trying to
good?
play us this time.
What's good?
YouTube, what up?
Let's get it popping.
They ain't put no ad on us. Shout out to them for
Let's do
that.
it. Let's do it. Let's do
No,
it.
no free promotion. We're gonna get the thing going.
Let's do it. Back on the New York time.
It's back on the east side of things.
That's a fact. Back ready to get it rocking. It's been a minute. Been a minute since we recorded from the East Coast, but we ready to get it going. Ready to get it going. If you see that, you know, we got working on our new home, our new headquarters.
Yeah.
So that we are back in New York, and we are back home at our new headquarters. So you guys are the first to see it. First to see it. We got the, you know, we still working. It's not completely done yet, but you know, this is what we're going with. What up? What up? Oh, they in here early. Let's get it.
What's going
on? Let's get it.
My brother.
What's going on, bro?
Y'all looking amazing, man. Michael, come to Houston. Hook your guy up. How y'all doing? Happy Monday to you.
Happy Monday, man. How's everything?
Man, amazing. I'm ready for this one.
Fab Five, right?
Fab Five.
Yeah.
You know what the rappers say, this time for the money. We doing all that today. Yeah.
That's a fact, man. Welcome back to everybody. I see the earners is getting in here. YouTube is in here crazy.
Yeah, they filling in quickly. I'm excited about today. I'm always excited about Market Mondays, but today definitely we got a lot to talk about, a lot going on. I know a lot of people have questions about everything that's been going on in the market. So yeah, and we actually have a guest too. We have a special guest today too.
Yeah. A lot of people's in the green.
So yeah. So it's a lot that's going on today. So first and foremost, we want to welcome everybody to Market Mondays. If this is your first time, welcome. If you're a return earner or Panda, do you have a name for your community? Pandas?
Red Panda family.
Red Panda family.
Yep.
Welcome back. Shout out to everybody on YouTube. And once again, we're back in New York. You know, it's been a while since we were in New York. So we made it back from the West Coast safely. We enjoyed ourselves. We had some legendary content, met some great people, and we really enjoyed ourselves out in California. But now we're back on the East Coast.
Shout out to Dame Dash. No step and repeat this time.
That's funny. That's funny.
No, man, we can't go any further without wishing you a happy birthday to the public, my brother. Happy birthday.
Thank you, man.
82, baby.
I know, it's crazy.
Yeah, man, looking sharp, man. So hopefully you enjoyed it, and more blessings for many more to come.
Yeah.
Thank you. God is good, man. I appreciate that. Love y'all. I'm gonna say it to the end. Thank y'all for being solid. God believes in the vision when a lot of people passed on this graduation demo. So I appreciate y'all. I hope I made y'all proud in the interim. All my Red Panda family, thank you. I love you. To my mom, my dad, brothers, cousin Jaleesa, Shayna, Bryce, love y'all. Rock Nation.
You got the Soul Train Awards.
Yeah, I had to real quick. I had to throw in a couple real quick.
Oh man,
shout out to you, bro.
For sure. So let's get into it. We got a guest, so let's make sure that this moves smoothly. First and foremost, disclaimer.
Let's do it, man. So you know how this goes. Every week we're gonna do this disclaimer. So do your own research. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and wish to rely upon, whether for a purpose of making an investment decision or otherwise. Those are the guidelines, man. Please stick to them.
Please. Respectfully.
Do.
Guidelines. Once again, if you are a member of Red Panda, if you have a question, please email or hit Ian in the Telegram. That's better suited than on this platform because we try to move it along as quickly as we possibly can. The people that are asking questions in the Zoom are members of EYL University. Shout out to all the earners. So people on YouTube, if you have a question, who those people are. EYL University, we love you guys, but please trying to limit your question to one question.
Just one.
And the question, please make it an investment question, not specific for like one particular stock. So in the interest of time, we can't like just like give out like 50 different stock tips.
Yeah, don't worry. If y'all do, you're gonna hit a word guideline,
Yeah.
and then we're gonna
Real
move
quick.
not because we don't love you, because we got to move on to the next person.
Try to make an investment question. And then also EYL University, apologize to anybody that couldn't get in the book club. It maxed out at 100, and within 1 minute, the book club is amazing. So
What book y'all reading?
The Color of Money.
The Color of Money.
So that's our book of the month, man. We
That's
started
cool.
yesterday. Listen, we maxed out within 5 minutes. I was trying to get Mike on the horn, like, yo, we got to push this thing up to 1,000. Don't worry. So if you missed the book club, shout out to Janet, EYL Janet. She's actually doing the transcript. We're going to start recording them, and we're going to allow at least 1,000 people in there. So that's the most they're going to let us. It was crazy yesterday, man. I brought my brother in there. Shout out to G. I think he's watching right now. Arthur was on fire yesterday. Y'all know, if y'all was in that book club, y'all know, man, it was powerful. I mean, powerful. Every week, every other week, I told him, I said, yo, Matt, man, they might say like, yo, we might have to push your breaking bread session back a week, man. It was that powerful. So shout out to all the people and the earners in the book club.
Yeah. So apologize about that, but next time it'll be open to everybody. Nobody will get shut out. And tomorrow, 1 o'clock, Matt's doing a how to calculate closing costs class.
Everybody forget that.
EYL University. And then Wednesday is a college class for Lenny and Jeff.
Yeah, our boys.
College professors. They're going how to navigate the cost of college during COVID for parents, for anybody that's in college, looking to go to college. There's a lot of grants and different things of that nature. So you need to be aware of that. Yeah, so EYL University. And anybody looking to join EYL University, the price is going up on August 28th. So if you're interested, we're still running that 40% promo code, but August 28th, the price is going up.
You heard that sound?
Yeah, it's just too much content because we keep adding to it. So it's like an ongoing thing.
Join now.
Do yourself a favor. Let's get into it. Ian, where do you want to start?
I want to get right into Apple. You already know what it is.
Let's do it.
You the host, my brother.
Let's do it.
Let me share my screen. Yeah, I need to hop in that book club too.
Yeah, and the code is earners. I forgot to say that. If you want 40% off, go to EYL University, and the code is earners. So yeah, the book club is lit. That's the whole
Super lit.
environment.
All right. So the number one question we've all got all weekend, shout out Trap too, right? The number one question we got was, what does the split mean for us? So you guys know I love my analogies, right? I want to keep it very simple. The Apple split, let's say you had a house that was 400,000 and now it's available for 100 grand. Type yes on YouTube and in Zoom if there was a house on sale for 400,000, if you would buy for 100,000 if it was available at the end of this month. Type yes, please. This is what's happening. So Apple is split several times. I think this gives the best case scenario for why you should invest every month. For our first-time listeners, I appreciate you. I want you to invest long-term first before you do anything else. And tonight, I hope I do a good job at illustrating why. So this, once again, is why you should buy every single month. We don't know when the company is going to split, but we do know that Apple is the most amazing tech company on the planet. Type yes in chat and Zoom and YouTube if you have an iPhone. Type yes, iPhone, please. So everyone is asking me, should I buy now or after the split? Stock Club members, love you. If you guys want to join the Stock Club, go to joinredpanda.com. I think we have one of the most amazing lists in the history of the last 10 years, right? But so I'm not going to give them our price. But the answer is both. If you can afford to do both, you need to buy both. So you need to get some before the 31st. And after that price drops, buy more shares, because the more shares that you have in your possession, the quicker you will get to retirement. We can't retire off of 25 shares. The number we want to aim to get to collectively in our portfolio is 10,000 shares minimum. So now the Apple's going to go from mid 400s to 100 and eventually less. When there's a drop, we have an opportunity that has not been here since 2014. So I still want you to continue to buy every month in Stock Club members. This is why I stressed dollar cost averaging in the 4 retirement picks that we have. So write this down. I need you to hold these for 5 years. I know everyone wants a quick flip. I know a lot of you guys see us trading in Red Panda with futures, getting great gains. I know you guys have been following Mark, right? Options, amazing. But you will not be able to beat time. Minimum 5 years. Ideally, you want to hold for a 30-year period. Everybody type in chat, 5 to 30-year period, because you cannot outwork time. Let's say you get hurt, injured, maimed, something bad happens. You will not be able to trade. The acquisition of these companies into your portfolio, you still will be able to have in your possession. So I need you to hold these for 5 years. I know you want to fast flip, but for those of you that have been in since March, you've done an amazing job, right? So I have to stress, invest long-term, because if you would have been in Apple since 2010, you'll be up 4,000 or 5,000% depending on when you got in. It's an amazing feeling to wake up, see that the market is up, and then be up several $1,000s without having to do anything. It's great when you do it on the trading side, but you have to, one, invest first and then trade, not the other way around. Don't trade first and then invest. Invest first, long-term, and then trade. So let's talk about this. Microsoft is in talks to buy TikTok. So you guys know Microsoft is bae to me. And the biggest companies will always acquire the best talent. So when you guys are asking about 5G, I personally think that Microsoft, Tesla, and Apple will move into the healthcare space this decade. Why? Because they have the most amount of money. So this is no different than what the LA Lakers have done when they acquired LeBron and AD in this era, Kobe and Shaq back in the previous era. So the biggest companies are going to buy the best talent. So when you guys are often looking for the best thing, the new best thing is probably going to get acquired by one of the behemoths already out there in the market. So look at this. This is why long-term investing is key. If you had $1,000 in Apple and held it to today, you could have grossed $12.7 million if you reinvested all the dividends and never taken any money out. I know some of you don't want to invest long-term, but for those of you that are interested in generational wealth, because I feel like this is a talking point amongst the Black community, we're not going to get generational wealth in a 2-year period. It's going to be 20 to 40 years. So if you love your kids, shout out to my parents that is putting money in their account. And I said it the other day and I posted it. Man, it's an amazing feeling for my son to have more invested in the market at 5 years old than I did at 30. Trap, I know he has a bunch of money set aside for his child. Like, parents, I am begging you, if you don't do it for you, do it for your children. And then I know you guys saw this quote circulating around social, but this guy, Ted Frank, said, I sold my Apple stock in 2001 for $60K. Now it's worth $17 million and pays an annual dividend of $137,000. I don't care what he bought with that 60. It wasn't worth the 17 that he missed on the back end, and 137,000 coming in consistently from investing in one of the best businesses ever invented. So that's my case. Please invest long term. I hope this explains why Apple and Microsoft are bae.
Yeah, no, that was a great, thank you. That was a great.
Shout out to bae.
Yeah. Shout out to Mark on the super chat. I appreciate it. And shout out to Pete on the super chat as well. Appreciate it.
I'll see you. Mark, what up, man?
Shout out to Pito.
Pito, that's a fact.
That's our guy.
They both gave $100 on super chat. And I think this is interesting. We're gonna go to some questions, but before we go to questions, I just want to just double down that Microsoft thing, because we posted about that, tweeted about it last week, and then screenshotted the tweet and put it on Instagram, and was saying that Microsoft was in talks to buy TikTok, and at the time people were saying, well, President Trump just came out and said he's going to sign an executive order. It's crazy. Like, the media is a very powerful tool, and it's interesting that people still believe politicians. I'm not a political person, so I'm not really here to take a side either way. But when they said that, they was like, he's going to ban TikTok, so it doesn't even matter. I'm like, if Microsoft is interested in buying TikTok,
and they've been lobbying,
the president is not going to ban TikTok. They're like, well, he made a promise that he's going to ban it, and then today He said, well, all right, well, he said, as long as the government gets a piece of the buyout, it's all good.
And I think he gave him a deadline. I think he gave him to the 15th of September to get the deal done, which
and even if they don't get it done by the 15th, they're gonna push it back. So money talks in this world, and that's what I'm starting to realize that more and more, even with a lot of stuff that's going on socially, politically. At a certain point, money is the only thing that matters.
Yep, my grandmother used to tell me that.
We heard that a lot.
That's a fact.
My grandmother used to tell me that politics makes interest in bedfellows. So for those of you who don't understand that concept, if I give you a cut of my deal and you introduce me to somebody, you're going to let that deal slide through because you have some interest in it. Also, election year. He does not want to go into November with the market being down, jobs being down, and Corona ramping like crazy. He wants to have a case too to say, hey, I prevented a national security breach. An American company bought him. Enjoy. So politics as usual.
And from the business standpoint, people are like, why would Microsoft be interested in TikTok? Well, TikTok is the fastest growing social media platform. It has a youth, right? Like my 6-year-old son heard they're going to ban it, and he was like, Daddy, why are they going to ban TikTok? Like he wanted me to explain that to him. So that tells you like the youth is there. But you also know that Microsoft owns LinkedIn, right? So right now, LinkedIn, obviously, you know, they're probably going to take a loss in this quarter, right? Because businesses and not hiring at the same rate that they did. If they get TikTok as an acquisition, you now hedge your business position, right? Now you have a spot that can grow versus a spot that's probably going to take a loss in the short term. But you have a huge platform, right? How many people on LinkedIn? 700 million, something like that?
Yep.
You got almost 1 billion going into TikTok. You got a platform now that is sustainable and can compete with the Facebook and Instagram.
Yeah, well, LinkedIn is actually profitable, and LinkedIn has been a good acquisition for Microsoft. A lot of people don't even know Microsoft owns LinkedIn, right? Which is interesting because people saying like Microsoft doesn't know anything about social media. They have like one of the biggest social media platforms in LinkedIn
that no one talks about.
We spoke about LinkedIn on a podcast a few times. Yeah. LinkedIn is actually the business jewel. Everybody on business is on LinkedIn. Microsoft owns LinkedIn, and so them coming to acquire TikTok, to me that puts a lot of pressure on Facebook, because now you got with the professional aspect, which is LinkedIn, on lock, and now you got the youth. TikTok is the #1 app for all teenagers. It has 1 billion users right now, and
in a year
it's only growing. Yeah. And like you said, you know, our kids, if you have children under the age of 12, like they don't even really.
They're obsessed.
All they care about is TikTok.
Be mindful though. Yep. There's some stuff that they probably shouldn't be doing, but you can't. It's unstoppable. Like a 6-year-old can use it. Yeah.
So I say that to say, I personally think that would be a good acquisition for Microsoft. I think it's going to happen, and I think it'll make Microsoft more valuable, and I think it will put competition on Facebook. It won't destroy Facebook, but it'll put competition on Facebook. And it'll be interesting to see how it plays out. And I just wanted to say before we go to the question for Apple, is interesting as well because of the split. So like you said, it's like I had an Apple option. I had a $400 option for September, and I sold it like 2 weeks ago at like 70% or 80% profit because I got nervous. I was up like 150, then it went down. And I'm like, I really didn't see how Apple was going to reach $400 by September.
You know, I'm going to throw you that oop off the board, man. I got you.
Hold on. So
Fab Five.
You know how we move, Ian. So like when he bought that option, I was like, well, I got to give me an option. So he had the 400. I got it a couple of days later. I said, you know, I'm going to grab the 415. And so I didn't sell mine. And we watched that 415 go up to 300% today, man. It was an amazing thing to watch. So patience is a virtue.
Patience is a virtue, but hindsight 2022.
Yep.
I mean, there's really no way we could have predicted that the stock split. At this point, I personally think it could hit $500 by September because I personally feel like it's so much FOMO in it. People just going to keep piling into it, and $500 by September is very possible.
It's probable.
Yeah. Yep. So the split happens on the 24th, right? So anybody that's trying to buy shares and it needs to buy it before the 24th in order to get that 4-to-1 split. So if anybody had a question about that, the 24th is the time you got to get.
But the great thing is, it's not even it doesn't really make a difference. It's like, let's say if it's $400 and they split it, now you just have $100, but you have four. So it's like, you're not getting any more.
Yeah.
But psychologically, people you have more shares.
Yeah.
So what it does is it allows the retail investor who says I couldn't afford it at 400.
Oh yeah, that's why.
We'll buy it at 100.
You about to say something, Ian?
Yeah, and the split is on the 31st. So
okay.
end of this month. But I definitely think it can hit 500. And like you were saying, it gives the average person who does not have 400 or 500 per share lying around to be able to get into the game and be a part of the market where it was discouraged. Because like Amazon, too expensive. Microsoft is getting up there, so it helps a lot that Apple will do a split right now. And also from an ego perspective, like Tim Cook wants to cement his legacy as well as having a profitable company during the recession, providing shareholder value, great returns for investors. So, because I still think they don't mention Steve enough now, but we know how corporate can be. So there's a couple of incentives for them to have done the split. But with this time, with the market being the way that it is, it's definitely a great sign. Definitely a great sign.
Let's go to some questions before we bring our guest on. Shout out to Charles on the $100 super chat. Shout out to MG the mortgage guy on the $100 super chat.
Matt Charles, what up, my brother? I love you.
Shout out to P on the $100 super chat. Shouted him out, and shout out to Jerry on the $20 super chat. Appreciate you guys.
Natasha, we coming to you first. Unmute yourself. You've been unmuted.
Wait a minute. Hold on. Hello.
Yeah. Hey, how are you?
Oh, fine, fellas. I just want to thank you all for investing in us, providing the information. We really appreciate y'all.
I appreciate you. Thank you.
I lost my train of thought. And the question is that I have for you is, what do you think about the company Exact Science? I think that's what it's called. Exact Sciences.
What's the ticker?
EXAS.
Are you in the stock club?
I am.
I'll send you a note here in Telegram in a second. It's okay. I don't love it. Well, what price did you get in?
Got in at kind of high, 90.57.
You're gonna have a little bit of turbulence. If you hold it, you have a chance of getting back to 110. You have a chance to get back to 110.
Okay.
Yeah. And you're good.
Thanks.
Thank you so much. I appreciate you.
Thank you, Natasha. Please, no individual stock questions. Natasha, we appreciate you. She might have came in a little later, but yeah.
I'll see you guys asking about OPK. No go. No bueno. Don't do it.
Willis, we coming to you. Unmute yourself. You've been unmuted.
Hey guys.
What's going on, Willis?
Not a whole lot doing yard work, but I'm glad y'all doing this. I appreciate it. I figured y'all were going to talk about the Apple stock split, but my question is more so a general stock split question. So, in doing a little research, I found that historically, maybe more than 10 years ago, stock splits increased the buyer amount because it was more affordable, like you guys said earlier. But nowadays, they're saying from the research, saying it was kind of slowing down because one, they have fractional shares, and the other is hedge funds are not as intimidated as well because there are more stocks that have the $100, $200, $300 value than there was 10, 20 years ago. So my question to you guys is, do you guys feel that same way, or is what I was reading, the research I was doing, kind of just somebody's opinion?
We have an amazing advisor in Rashad. So
no, that's a good. I'm glad you said that, because some couple people had asked us about fractional shares, and that definitely has changed the landscape. And Apple is interesting because a lot of their competitors don't believe in stock splits. Amazon does not split their stock. Tesla has not split their stock. We know Warren Buffett doesn't believe in stock splits at all. So most of the companies nowadays actually don't believe in stock splits, but Apple still does. So yeah, it definitely has changed to where you can actually purchase Apple in the ETF. You can do fractional shares. You can do mutual fund. like you said, it's the landscape has changed, but there are still retail investors that want to just purchase 100%. They don't want to have fractional shares. They don't want the ETF. They want to just own. So there's still a marketplace for it. And obviously we're seeing by this that the demand is still there, because once they announced it, the stock price went up crazy. The only reason why the stock price went up so crazy is because people want those 4 shares when it splits. So yeah, the fractional shares is definitely something that's played a part, but I guess that there's still a high demand, and it makes sense. I mean, these people know what they're doing. So, you know, Apple, you can't argue against Apple, but it is interesting because a lot of their competitors do not believe in it. So Amazon is almost $3,200 a share, and there's no split in sight. So we'll see what happens.
Right. Thank you guys.
Appreciate you, Willis.
Thank you.
Shout out to Charles Connie on the $100 super chat. He said, I've been holding Apple long enough to see every split and been in Microsoft, Amazon, Exxon, and over the last 18 years. And my sons have had Apple and Microsoft for 15 years. Shout out to you.
My guy. Yep.
Shout out to you.
Yeah.
Hold for the long term. I see you guys asking about Kodak. Kodak is dead, dropping to $12.93.
Let me ask you. Let me just say that since you brought up Kodak.
Let's go into that a little bit.
First of all, YouTube, if you could take a minute to like this video, we greatly appreciate it. Almost at 3,000. If you could take this minute to like this video, please hit the like button. Everybody on YouTube, hit the like button. Kodak. Interesting. So what I realized is that Robinhood has created a whole new marketplace for opportunity, because we saw what happened with Hertz, right? When it went up like 800% in 4 days. And then Kodak last week went up 1,200% in 2 days, something like that. So naturally, people are saying like, damn, I wish I could have got in on that. I wish I could have got in on like and made money on the 1,200 and 800. But then I realized that it's really no, it's really no way to really get in on that on the ground. Like that's kind of like luck, but you can make money because you know that it's a pump and dump. So what we did, we brought puts. We brought puts on, and I put it actually in the investment group on Facebook, EYO investment group on Facebook. On Thursday, I said, look, I'm buying a put. I brought a put on, I think I brought the October
16th.
$20 put.
$20 put.
And it's dropped before then.
Kodak was at $36 when we put that put in.
So now it's at like $16.
16, yeah.
Obviously, we made money on the put. We're probably gonna make much more money as it starts to trickle down. So what I'm realizing now is that at least once a month you're seeing these pump and dumps, and it's kind of unfortunate because I feel like these people don't fully understand. They getting taken advantage of. Like that's the whole thing with a pump and dump. Like you see something go up and then you feel like you're gonna miss out, so you start to pile in, but it just goes down. But I mean, Ray Charles could have seen that one coming. Like it literally shot up. It's a $2 stock. It goes to $36. What do you think is going to happen? I mean, I appreciate the fact that Kodak changed their business model and adapted to time, but at the end of the day, they're a camera company
that's about to go into the pharmaceuticals.
That's about to make a pharmaceutical drug for coronavirus.
Yeah, we kept getting text messages about it. I'm like, yo, this is a camera company that's going into pharmaceuticals. It shot up 1,200%. You think they're going to turn pharmaceuticals around in 2 months?
They weren't a great camera company after 99.
No,
that's a fact.
They're going to $12.93. For all of you that made money, just give me a thank you on Instagram or Facebook. Like it's going to $12.93.
Yeah, it's one of the things you say.
It's the same thing.
Either whether the market goes up or down, somebody's gonna make money. So like when somebody got the advice, I said, yo, Ian says that all the time. Take that advice. Either way, somebody's gonna make money. So hopefully everybody was on the good side of that transaction.
Shout out to Mark SMH. That's his favorite.
The Dark Knight is.
But yeah, so I say that to say there's gonna be opportunity. I think because I see this happening a lot now. Where I'm noticing a pattern that like once a month these just companies that just out of nowhere just start going up randomly like 800, 900%. So I'm not telling you what to do, but I know what I'll be doing. And like I said, it's an unfortunate situation because whenever you short something, in order for you to make money, other people have to lose money. Probably the vast majority of people lose money.
We're gonna lose, yeah.
But this is the game that we chose to play. And if you are playing this game out of ignorance, or if what they say in the court of law, ignorance is not used as a defense. Ignorance will not be used as a defense. If you are playing this game out of greed or ignorance, you're going to get punished. And yeah, anybody that's taking part of these pump and dump things, and you get in when it's up 800%, you're gonna end up losing a lot of money.
For my technical traders, if you go back to 2018, the high was 12.68. Earlier this year, it dropped down to $1.05. So of course there was unusual options activity. Shout out to my guy Drew, who sent me the chart. It took off to the upside. So I always tell you guys, go back to that 5-year. But the high before that was in 2015 at 16.63. So it got to 60. So it's like if I'm averaging 14 points a game and then I score 58, do you expect me at the next game at the Rucker to score 58 again? No, that's not my average. That's not my average true range, right? So it's going to slide back down. So for my technical traders who were incredibly oversold, it's a very speculative play. It's not going to work out in the long term. For those of you that have made money on the put side, you're good. And there's no such thing as a bad market, just bad entries into it. And any technical trader would have been able to see that.
Yeah, I think we're gonna bring on. I just want to just shout out to Amir on the super chat. I appreciate it. Shout out to them.
Oh man, Demiliola. We're gonna try. Shout out to you.
Shout out to Marco.
Shout out to everybody on YouTube. We just hit 3,000 on.
Shout out to Lulu.
That's a major.
Thank you guys so much.
Yeah. Shout out to everybody on YouTube. We love y'all, man. Is it time for the guests?
He's here. I see him.
Let's bring my guy in.
Let's do it.
NIO, I don't like, for those of you who are asking.
They finally sold some cars, man. They finally sold some cars. They released some numbers. We'll talk about that a little bit later.
Yeah. So we're gonna take a break right now from the questions. We're gonna spice it up. EIL Market Mondays is it's a cultural phenomenon, and we spice it up. We do different guests. We do different. Last week we had Masiko on. Shout out to her.
Yeah, shout out to her.
And staying in the vein of entertainment, we have Ian. You want to do the introduction since this is?
Yeah, I appreciate this cool guy for hopping on with us tonight. It's my guy Jay Lee, actor. You guys may know him from the show The Orville with Seth MacFarlane. We went to college together, and the thing that I love about Jason, he's always stayed the same person through college. Post, so I'm glad to have him on tonight. I appreciate you, brother, and I still owe you for that favor. You did me and Ty in college. Yeah, so I appreciate you, man.
All good. Can y'all hear me okay?
Yeah, we hear you perfectly. What's going on, bro?
Oh man, I appreciate y'all. Hold on, let me wipe this off so I ain't all fuzzy on this joint. Trying to look like y'all. I'm trying to look like new money. You know what I'm saying?
What's going on, bro?
Listen, man, on some real talk, I appreciate y'all having me. As Ian said, man, we go back. I'm very proud of him to see a lot of the strides and things he's been doing. And I'm learning a lot just listening and sort of tapping into this side of it. And we can get into sort of money and investment and how the entertainment industry works because I sort of view money a little maybe weirdly sometimes. So I'm trying to really, as you guys talk about, this generational wealth thing is very important to me.
Yeah, let's get into it. Because being an actor, we just came from Hollywood. We was in LA for a whole entire month, and it's interesting because Hollywood is run differently than you don't know when you're gonna work, and it's you might get a bunch of money, and then it's like kind of like being a rapper or a musician, right? So how'd you get into investing? What made you make that decision to actually become an investor?
So look, and I'm gonna keep it all the way funky with everybody here because I feel like, people don't say they don't know enough.
Yep.
Right. I think a lot of people, especially in this town, and I'm sure y'all deal with it in your field, everybody want to act like they know everything. You want to act like you got the answers to everything. I don't. And I think that's one of the reasons I've been somewhat successful just in my career. So for me, I always invest in my stuff. And that's because, coming to Hollywood, there's already a setup, there's the studio, they got the money, right? They find the projects that fund the projects, and then the money goes to the EPs and the studios, et cetera, right? So I came into the game, and once I started making just a little bit of money, I was just flipping my money back into making my own projects. So while I wasn't making money off of it, I own all my stuff. So I am now at the point where I start to see the results. I see the end goal, but that was, over 12 years of just grinding and making a $5,000 project here, or $10,000 project there, but cashing in favors. So it looks like something way more expensive. So I say all of that to say, I'm brand new, nose wide open to the stock market, into this whole world. And I got to be honest, it is intimidating because you feel like you're so far behind.
Okay.
You know what I mean? So,
Yeah.
And that's why I said, I want to be honest with y'all, because I know there's a lot of people out there who want to get in, whether they got $1 or $1 million, right? But they don't know how to get in. So, it's almost like you go to the club, right? And everybody buying top shelf shit. You only got $5. You trying to fit in. So you don't say nothing. I'm the person that's like, look, I want to learn more. So, just cards on the table for everybody watching.
I appreciate that honesty, because the thing that I want you guys to see, because Jason popping, he gonna be humble, right? But he popping out there. Everyone across all walks of life are still intimidated, right? So I want to ask you, as a beginner, what about investing is so intimidating to you? So maybe we can do a better job to break it down to get more people interested in it.
That's a great question. And I also want to preface this. I love what y'all said at the top, right? Look, we're going to sort of have this platform, but y'all need to do your own research. Yeah. And I always say this when it comes to projects, movie, TV, film, whatever. Take what you need, throw away what you don't. And if this doesn't apply, don't take my word for it. This is just me. So as an artist, right? Like I play piano, like I write scripts, I direct. Tangible things, right, are very sort of important and key to me. So I think I've learned that sort of thing. So let's say I had some extra money, right? I could invest in the stock market. I could, put it somewhere. But my brain always goes, well, I can make something with this. Whether it's, and I'll talk about this in a second, but I created a brand and a school called Do Better University. So I can invest in that. So I'm very much of the ilk of like, use the money and the resources to create the thing. So I think what's intimidating about, let's say, the stock market, and especially if you don't have money or a lot of money to play with, you're sort of putting your money out into the ethos and you don't really know how and where. And I think for me also, to be more specific, I don't like to do anything I'm not well versed in. So I recognize, I don't look at it as like a quick fix. We all know that cousin that was like, hey dog, let me borrow $5. I'll give you $10 back tomorrow. It's like, nah, bro, I ain't no fool. And you can't borrow my car neither. So take your ass on with that, right? So I think the intimidating part is it feels like there's such a vast wealth of knowledge and it's hard to trust who knows what they're talking about.
Got you. Okay, now when I follow a point, then I'll let you guys hop in.
Yeah.
But Hollywood, which no movie studios that went out of business, the biggest part of their business model is to invest into the market. So why don't you think more actors, entertainers, and those in the professional field are not replicating what MGM is doing, what Universal Studios is doing, when that's been the model forever?
I think, listen, from the circles I've been in, from the talks, and I know some people who got deep pockets. I know some people who really care about the industry. I know a lot of people who care about us and the industry and creating sort of long-term sustainability and wealth. I think it almost feels like you're trying to start a new MBA and there's already an MBA. It's like, how do you climb that mountain, right? Yeah. How do you start and you're looking at something like if you look at, MGM or 20th or Sony or whatever, it's like, how do me and my 5 friends create that? And I know a lot of people want to do it, but then that also gets into content and it's a little bit of a
tricky.
It's a layered conversation.
Yeah.
But I hope that, in that there's some answer. Because also I'm at this place now where, it's like, I could call you up and be like, hey, bro, I'm going to send you X amount of dollars and you just tell me where to put it.
Yeah.
You know what I mean? But to me, that's not how the majority of people are. People don't have direct access to people like y'all. You know what I mean? Like this is a 20-year connection.
That's true.
So, those phone calls, not everybody can make. So I'm at a place where I can't, I can hit you up offline, but hey, bro, I got a little bit to play with. What should I do? But I think for most people, it's just a matter of just getting over the fear and just getting the knowledge, and I'm glad you guys are doing what you're doing.
So Jay, obviously, I mean, when you're doing the film thing, you said you invested in yourself, you put up your own money to create your own films, and you built your own catalog. When you're investing, are you doing the same strategy? Are you looking around to see the things that you're actually using, the companies that you're actually using, and you're investing in them? Or, I mean, outside of calling Ian, how are you finding your investments picks?
No, that's pretty much it. And y'all, like, I'm not gonna lie, like, and I'll say this too. I think because of COVID, a lot of people are home, people aren't working, people trying to figure out where they're gonna get that next check from. I fortunately have been okay. So I always say this, and again, I know this is probably a very different mindset when it comes to this conversation, right? And I always say I only think about money when I think about money, or I only worry about money when I worry about money, right? So if I were to really get heavy into the investments and stock and stuff like that, it makes the most sense logically, right, to invest in what you use. And I think that's something that you guys stress a lot of, like, it's actually not as difficult, I think, as a lot of people try to make it. But like you said, you look at Apple, we all have Apple products. Like, why would you not invest in Apple?
I'm gonna challenge you. When are you gonna invest in Apple?
What's tomorrow? I don't know.
let me ask you this, Jay. Because like Market Mondays is an investment show, but I think it's one of the things is we don't just talk about stock investing. There's a million different ways how you can invest money. And I think it's important for people to realize that one way that you can invest money is films, independent films. And it's interesting because we just interviewed Dame Dash. So I know a couple of years ago, he made a lot of news with.
Yo, how was that? You're like, no, fuck all shit. Put my glasses on. Shit, yeah. Fuck yeah, I own all my shit. Like if you don't own your shit, you work for somebody else. I work for myself. I'm a boss.
That's a fact.
All y'all got bosses. I'm my own fucking boss. You got your own boss. Everybody got their own boss.
That's exactly.
No, come over here with that. No.
That's Dame to a T.
Shout out to Dave.
That's exactly how it was. So, so he invested, I think, like $1 million in Lee Daniels, and it was a whole thing. Everybody knows the story. But that was interesting. I just thought about that because that's an investment as well, right? Like he's invested in film, and a lot, especially with these independent films, like you see the Sundance Film Fest. Can you kind of just explain that? Because from my understanding, like you could be an independent film, and then you go to like Sundance, and then like a major company picks you up, and then that independent film that was funded for $100,000 can get brought out for like 50 million. Like, can you kind of just like explain how that works?
Sure. Yeah. I mean, the industry is changing, and it's definitely changing now, especially with COVID. But, you look at like anything, like there's a product, right? You make a product, and the film festivals, what they used to be, really what they were primarily for were, you had all your studio joints, right? All the big 20, 30, 40, 50, $100 million projects, right? But we're all roughly, the same age. We came up watching, random independent films here, and we just like film, right? So those sort of price points, films 10 million and under, 5 million and under, $1 million and under, they would go to the festivals. And the festivals, what would happen is you go to the festivals, the movie gets in, all the buyers, the distributors come, they watch, a weekend full of films, and then you bid on it. So, Lionsgate or now you got these streaming services, so Netflix, Hulu, Amazon, any A24, any film distribution company could come and just put a bid in for the product. So it was a way, A, to make money, but then B, to really get your projects out there. And I think the other thing, and I'm glad you brought that up about investment, because in our industry, a lot of times, it's the chicken or the egg thing. If you're an actor, a writer, or a director, you can't make a movie until you've sold a movie. But I can't make a movie until I sell a movie. So how do I get in? So what a lot of people would do, and I accidentally sort of hit the shot, is I just started making my stuff years ago. You make something, you might take an L on that investment, but then you get the call for, we want to hire you to come direct this thing or make this thing that's worth 20 times the thing that you spent just to get your work out there. So the festival market was it kind of almost like a swap meet for movies, and if you were looking for a drama or a comedy, depending on who was looking for stuff, you could take your projects there. But I think with the advent of all these streaming services and direct to consumer. You guys talked about TikTok, Instagram, Facebook, Live, all that stuff. A lot of that model is changing, I think.
Speaking in the business model, especially in film and movies, like it was an Emmy nomination, right? That just happened, and people were presented with their nominations. I need people to understand like what that does. We did that on our second episode. We like save all the accolades just to do, but what does an Emmy nomination or actually winning do to a person's career financially, or for a show financially?
Y'all got the blue check marks on Instagram or Twitter?
Nah, not yet.
Not yet.
Hey, my life changed once I got that blue check mark. I ain't get no money, but things changed, right? And I'm gonna just spill the beans a little bit here. When it comes to stuff like that, it's just clout, right? So again, if you're online and you see somebody with a blue check mark, it does something. You're like, oh, that's verified, that's certified, right? It's like having that little bit of credential. With the Emmys and any other award show, you can pay to submit to all of it, right? Like we could create a show called Enjoy Your Leisure, the short film, okay? And we could do 6 episodes and you could pay the Academy for the most part. This is a very blanket statement, but you can follow me here. You can pay to be considered as an Emmy award-winning show. And now you could walk around and be like, the Emmy award-winning show is Enjoy Your Leisure. And all of a sudden you create your buzz. So again, I think in this entertainment industry, so much of it is your brand, is your image, that sort of stuff. Even if the projects are trash or not, they just all help your overall brand.
What are some of the biggest lessons that you learned being in Hollywood? You got some connections with some deep pockets. What are some of the biggest lessons that you learned being around those that have immense wealth?
I think this is going to translate. They always say, believe and invest in yourself, right? So the people that got the bread, they invest in the things they believe in. As a content creator, again, you can't have Apple without people making Apple. You can't have 20-year TV shows without Seth MacFarlane being behind it. So to invest in it, right, that's going to create opportunities for everybody else. So, and mind you, Ian, I'm sure you know this. When you first started, people are like, whatever, don't care. And then all of a sudden, you see shit start to change. Excuse my language, for the young folks are watching, but you see stuff start to change. And then all of a sudden it's, oh, well, how did you do it? So I think in the rooms I've been in with the people I admire, and not just financially, because I'll say this too, I'm a big integrity person, right? Like I'm big on integrity. I'm big on purpose. So, there are a lot of people I know who got money who I don't want to talk to. I don't care. Get away from me. I'm gonna punch you in the face. Yeah. The people who got money, who are about something, are creating positivity in the world, creating thinkers in the world, that's what I'm interested in. And out of those people, and there are a few that come to mind, they all believe and invest in themselves.
That's a good one. Rashad, you got to follow up?
Yeah, no, I 100% agree. And I feel like no matter where you're at, whether it's Hollywood, sports, whatever, it's just encouraging to see, people taking financial literacy serious and everybody's into it. So it's a tidal wave, and we just want to try to just highlight different people and just, I just think it just gives people inspiration too, because it's like a lot of times, you see people on television and you kind of like just automatically assume that they know everything, they have everything together, whether it's sport, entertainment, whatever. But a lot of times they just trying to learn, just like you, whether you work, a sanitation worker or you're an essential worker. Everybody's, at different points in life, but we all figuring it out together. So that's
and real quick, I was just gonna say, I think the other thing, us as Black people, I'll speak for myself, but if the shoe fits, we're so used to going from nothing to all of it, right? So we look at a lot of the people who have big wealth that we know about, musicians, athletes, and actors, right? That we see, I bought the big crib, I bought all this stuff at one time. There is something very special about, I make $40,000 a year, and I can still take some money and invest, and I can still take some money and put away. And I think that's a that's almost a thing, and it might not be for the viewers here. Everybody seems to be pretty, you know, astute and awake to what you guys are talking about. But I think a lot of people are just like, oh, I thought you had to have a whole bunch of money to do that.
Yeah.
You know, it's like, you know, you can just go into a bank and like try to get a loan for a thing and then create a thing. It's like, yeah, oh, right. That's a possibility, you know?
Yeah, and it also highlights the multiple streams of income, right? Like you're already in the acting game, but you're not satisfied with that. It's like, yo, we need to have more streams of income, which is important. Not even, we said it's a necessity, right? Now it's not an option, it's a necessity. So that's important too.
Yeah.
You want to take some questions?
Yeah, let's take some questions. But before I go, I want to give Jay. So once again, we appreciate you coming on, and I know you said you wanted to talk about the Do Better University. So anything that you want to say?
Yeah. So for me, and again, I think this is, you know, it's interesting how this stuff kind of pops off. Is like, so I've been saying do better
Forever.
and do the work forever, right? It's just been a thing for whatever reason. It's just been a part of my whatever. It's been a part of my mission, part of my whatever. So recently, with all the events going on in the world, I was doing a lot of lives, and you know, I'm the guy that a lot of people feel comfortable asking questions about things in our climate, right? So my phone was ringing a lot over the past 3-4 months about people checking to see if their thoughts and, you know, preconceived notions were indeed correct or incorrect. So my whole thing has been like, you don't have to do like me, but you just do better. Like you do your personal best. You just do better. So as I was on one of these lives, I was giving out some information, and my homeboy was like, man, take us to class. And then all of a sudden this idea of like, oh, Do Better University, right? And then that was right at the same time I had, and this is why I love what you guys are doing, because to get, you got to give, right? And I remember I put out a post that said, how can I be of more service? Because you know, life was good. My movie Atypical Wednesday was about to come out. Like things were cooking. You know, I'm on a show. I'm healthy. My family's healthy. How could I be of more service? And one of my buddies wrote, maybe you could give insight into the books or the things that inspire you, right? So this was all at the same time. So the Do Better University, along with sharing the information about how I move, all of a sudden made sense. So I literally was like, I'm gonna create a university called Do Better University. And then made a couple calls to people who I know are in the same sort of world, whether it's fashion or business ownership. And within a week, I had my first run of my material. It'll be up probably like 2 weeks. But also in addition to just getting gear, I put together a legit syllabus for like 20 students. We did like a 6-week course on how people could do better. And I had books to read, music to listen to, things to watch, mindsets. Had I known about, I'd have been putting them on y'all every week, you know what I mean? Like do better. So the idea of taking something from nothing and then having something, whatever that is, going back to a tangible thing, is extremely important to me. So I feel like I'm the kind of person who's like, I would call y'all up and say, hey, look, I'm starting this thing up. How do I make sure it gets to the point where you guys are talking about it on the stock market? How do I get to the point where you guys come up one Monday and you're like, y'all better go get DBU. I'm telling you right now, get DBU in with his swaggy ass tie, drinking his water, talking about DBU, that's the way to go. Gotta do it. I told y'all to do it. You know, so that's kind of where my brain is at.
Appreciate you, brother.
I appreciate you, man. I'm gonna challenge you though. For the next 3 months, I want you to buy Apple. If it doesn't work out for you, I'll cash up you.
See, everybody, listen, I'm gonna tell you why that's gonna work. I used to say this to people all the time. I used to write a script and I say, hey, listen, and this is before anybody knew who I was. I get to like pick a name, big star, I figure it out. And I say, hey, look, read the script. If you don't like the script, I'll buy you lunch. Just read it.
Yep.
So, okay, bet. I'm gonna hit you up, and yeah, I'm in tomorrow. Yeah, whatever, Monday.
Make sure you do his DM and make sure he does it. Remind him.
I appreciate you, man.
Sure.
Much love to you. I'm gonna wrap with you after.
I bet that. I appreciate everybody.
Bro, appreciate it. Yes, shout out to all of our friends in Hollywood. All of our friends in Hollywood.
All of our good friends.
Yeah, for sure. Shout out to Jay, good dude. All right, let's get some questions. And yeah, shout out to the young man that his T-shirt was late. We apologize about that. Sorry that you had an issue with the T-shirt.
Yeah.
No, I'm being honest.
No, seriously. I seen it like
take that. I want to take that. Yeah, I want to take that seriously. But yeah, you know, we definitely we have changed things with the merch, and we're moving merch out in a more efficient manner.
Yeah.
So sorry about that.
Yeah. Matter of fact, what you can do, hit info at Earn Your Leisure, and we can probably check onto that and get right back to you with the information.
And we'll give you something. We'll give you something to replace the headache of what you have going through for your T-shirt. So yes,
we appreciate the support in advance. Thank you.
Thank you.
Sabrina, what's up? You unmuted. What's up?
Yo, what's good? What's good, y'all?
How you feeling? Leo love.
I'm doing. Yo. First of all, exactly. Leo gang.
Gotcha.
Gang. You heard? So mine is a long-term investment question for y'all tonight. I called T. Rowe Price. I have an IRA with them. And I'm in a Target 2050. And what they were giving me some good advice today, but I wanted to run it past y'all. So what I was gonna do was move my money to the S&P 500, but they were telling me about it's called an equity index 500, which mimics the S&P. Because I was gonna move my money, but they were advising me to do that. But the 5 and 10 year return, so the 5-year return is like 10.48, and then the 10-year return was 13.71. However, the lady also told me about one called Global Technology Fund, and the 10-year on that one is 22.76%, and the 5-year is about 22%. So now I'm kind of stuck with which way to go for a long term. Say it again.
Is the fee structure equal in both?
Yeah, it's the same structure. They were telling me if I moved it to the S&P, I'm gonna wind up having to pay. So if I left it with their replica, the one that mimics the S&P, I wouldn't have to pay.
Rashad, you want to start first and then I'll hop in?
Yeah, Sabrina, first of all, I'm gonna get back to you on the insurance. I was in LA and we got wrapped up, but it's on my to-do list. I'm gonna get back to you for sure.
No doubt.
And yeah, my suggestion would be diversification is always good. So we talked about before, I think Ian had mentioned like half tech, half tech, half index, so that you can do the same with your retirement portfolio. Me, I'm a big proponent of tech, just like Ian. And you want to look at, it's good that you're looking, I think I had mentioned to you when we spoke on the phone, to look at the rate of return. That's the easiest way to kind of gauge an investment, is to look at I look at 10 year and I look at since its inception. So since its inception is when it's actually started. So that's like the gauge. So it's like if it was around since 1984, if something has done 15% since 1984, obviously we can never predict the future, but the best way to kind of predict the future is to look what already has happened in the past. So rates of return for the past is a big way how I actually look at investment, especially something like that, where index funds, mutual funds, stuff like that. So, but I don't necessarily know if you want to put 100% of your retirement in tech, because it's still, I mean, all investments have some level of risk. So the index is probably the safer bet. So the safer bet will probably be 50-50 split. That's a suggestion. That's just a suggestion, but that's a good question that you asked. But yeah, I'm glad that you actually looked at that 10-year chart. I probably would do like a 50-50 split.
Yeah, if you can split it. So this is a quick cheat code. So I know it's tough for most people to conceptualize, but the way to beat the market is by investing in the market S&P 500 and combining it with technology. Because on a year over year, if you look at all the top tech, they're going to do about 21%, well, 14 to 21%. So you'll be able to do that. Now, the older you get, the less risk you want to have. So I would taper that off, but you can just shoot me an email too, or shoot me a telegram and I'll be happy to answer tonight. But right now I would lean towards doing half and half if you can.
Yeah, because they were saying that the global one is high risk, and of course, like y'all said, the other one is a lower risk. So that's why I was like, yeah, but the return was crazy at 23. So I'm like,
that's a good rate of return for a 5 to 10 year period. Amazing. So I would do half and half.
I appreciate you,
Sabrina.
Thank you.
I'm gonna try this. Hopefully I'm gonna get this right on the first try. Izimo. Yeah. Hopefully I got it right. You're unmuted. Unmute yourself. Did I get how far was I off?
It was just a little bit far, but that's all right.
What's going on, brother?
Good. How are y'all?
I'm great, man. Good.
Yeah, this is my first time on the Zoom part. I was watching YouTube. I had a general question. For like news that comes out about stocks, how do you guys make sure that you get the news as soon as it breaks? Because sometimes I get the news like after or at the end of the day, and I'm like, dang, I gotta use this in the morning instead of at night.
Yeah, that's a good question. I mean, you can never really get the news before it comes out unless you have inside information, which is technically illegal. But the thing about it is a lot of times people don't act on stuff because they feel it's too late. And usually you're not. Like when we spoke about Zoom, I referenced that a lot because Zoom is still going up. But when we spoke about Zoom on our podcast, probably, what was that? March? Yep. It was already up 50%. So it already was up. Same with Madera, same with a bunch of other companies, Apple, Beyond Meat. So I say that to say, you don't necessarily want to buy something just based on good news, but that can be on your watch list. Yeah. Now what you do is you develop a watch list, right? And it's like, okay, now when something because there's articles that come out about a company pretty much every day. Like there's some kind of news on a publicly traded company every single day. Like if you go to Market Watch and you type in any company, you'll see news. It might not be a major headline, but there's some kind of news. So now when you have it on your watch list, you have your radar up for any kind of news that comes out, good, bad, minor, whatever. So now you're in a better position. So I wouldn't necessarily look for like the headlines, because then you'll just drive yourself crazy trying to chase the latest headline of a company to buy, and then you'll feel like you're too late, and then a new headline will come out. So you just want to just stay up to date on all news, but especially the companies that you have on your watch list, and then kind of just figure out the best time that you think is a good time to get in.
Everything he just said is 1000% true. I would just add, you can actually add alerts. So those companies that you're looking at that's on your watch list, if you put it to your alerts, when the news comes out about it, it'll update you, right? So even in some of the publications, like you said, Market Watch or Market Insider, CNBC, Fox, I just keep the tabs open, and then, I just refresh it. Every day I'm reading. So if it's a headline, great. And then sometimes if you go deeper into the articles or you go deeper into the page, you'll find some news. But keeping your alerts on and creating your watch list is very important, because then it focuses in exactly what you want to be looking at and the news that you're trying to find. And
I'll tell you this too. This would be a hot take, but if you invest in good companies, you don't need to. So this is a stress-based question. I don't want you to look at news as much. I want you to focus on quality, because then you'll be able to sleep well at night. I'll tell you, these last few months. So originally, Stock Club members, the list that I have for you guys was dramatically different. The world changed, and I said, okay, if I have to put my life on the line, that's how I came up with those 4. What we all want to do is we want to sleep well at night. We don't want to worry if our money is going to catch on fire. So when you buy good companies, you don't need to see every piece of news. Now, thank the Lord that the Stock Club worked out well. I get to keep my friendship with Rashad, Troy, Mike, Jamal, right? You guys not flaming me on IG. But when you buy great companies, the same way as you would draft a great player, you're not going to have to check. So if you have a player that's a knucklehead and you have to supervise them a lot more, GE, Ford, Kodak, is different than if you have to have LeBron, Kawhi, Giannis, who you know is going to show up week in and week out. So you don't need to do as much research and news if you have quality. So I'll give that perspective as well.
Appreciate you, bro.
Appreciate you, bro.
Thank
you. It is the 9 o'clock hour, and y'all could jump in at any one of these companies that I said, but I'm gonna give y'all the earnings for this week. It's another big week. So tomorrow we have Beyond Meat, which you know that we are very interested in. Beyond Meat will be reporting. They have some news today, speaking of news, that they are adding Sam's and BJ's, these wholesale market clubs, to their portfolio of places that they will be selling their merchandise. Disney will be reporting, which will be interesting because some of the parks internationally open. I know that we went to LA, we trying to get the park, it closed right when we got there. So I know their streaming service is big. I know Hamilton did a crazy thing. Shout out to Beyonce for putting out Black is King. We'll see what that's done for their subscription service. And Nicola reports tomorrow. So a lot of people talking about, can they compete or can they be competition to Tesla? That'll be interesting to see. I know some of the points that they had, they're talking about they're going to have 600 miles per charge, which is more than Tesla. So we'll see. They still haven't sold a car. Wednesday, Fastly will be reporting. And if you've been watching Fastly, and we mentioned that, I know we got to put a list of things that we said we've been watching. Fastly was one of those. They have been running. They've been on a run. And I saw somebody on YouTube talk about the company I'm going to say next, which is Wednesday. Wayfair's reporting. Etsy, these stay-at-home economy stocks that did well last quarter. We'll see what they're doing. And Square, another tech company that has taken over the finance industry because of their platform. And Uber on Thursday, man. Uber, obviously, the country has opened up slightly, but Uber Eats was always open, and so we'll see how that did. And then on Saturday, we got the big boys. Berkshire Hathaway will have their meeting on Saturday, so be on the checkout for that. The Oracle for Omaha will be speaking.
There's no competition to Tesla. Definitely not from Nikola
at all.
That's
no.
not
in the space. Not that they will ever beat Tesla, but
currently they are not competition.
No, they're not competition. No,
not
at all.
That's a phantom company. And it's interesting because Uber. So I told everybody I walk you through my options journey because I'm starting to trade options, and I highlighted some success stories that I had, but it's never all good. So a couple of things that didn't work out for me was Uber. I cut my losses in Uber and I cut my losses in Boeing last week, and I lost on DraftKings. That was my first ever options trade. But what I'm realizing with options, it's a lot like baseball. So if you watch baseball, you bat 300, you're a Hall of Famer. So like, what I'm realizing is like, you need one good option trade to take you a home run. That's all you need. You can strike out 3 times. As long as you don't strike out, and then it's important to cut your losses too. Like Mark has a rule 20%. You're down 20%, cut your losses. But that's actually worked because like the few losses that I took was minimal compared to the gains that I have right now. So I'm realizing that it's kind of like, and as obviously as you get better, your winning percentage goes up more. But 300 puts you in the Hall of Fame. 400. What was Pete Rose's batting average?
Oh, I mean, he hit 400 in a season.
Yeah, you hit 400. That's like one of the best ever. So
Tim and Ted Williams.
Yeah, something to think about.
I'll say this: 15-1 reward to risk ratio will save you a lot of headache. You don't even have to be that good of a trader if you have a 15-1 reward to risk ratio. So that applies to everything: stocks, futures, options. Map that out first, and you'll be good. And I appreciate you having that transparency because no trader wins every trade unless you don't trade or take one. You take one trade on the year and stop. Then you can bet 100%.
We will be having a conversation about my losses next week. My first option call was DraftKings too, and I know their earnings is coming out.
DraftKings is dead.
No, not dead. their earnings coming out on the 14th.
They're on the respirator.
My call is the 21st, so I definitely will be updating y'all on that. Small, they dead? No, he said no, they ain't dead. Sports is back.
Respirator.
Let's go to some questions. Valerie, what's up? You've been unmuted. Unmute yourself.
Hey, what's going on, fellas? How y'all doing tonight?
Good. How you doing?
Good, bro.
Pretty good. First, I want to say happy belated to Ian.
Thank you. I appreciate it.
Yeah, so my question is, man, I've really been paying attention. Like, I've been paying attention to you, Mark. Y'all just keeping me up to date. So I've been focusing on Kathy Woods and her stats and her statistics that she's been bringing out ever so often, every couple days. And she's talking about how savings rates has shot up. So it's like 19% when on average is usually like 8% pre-corona.
Yes.
So I was wondering, like, what do y'all think about when will that cash come back into the market? Because I'm thinking holiday time. Over time, we can't just let the money sit on the sidelines this long.
That's a good question. Ian, I want to say something about that, but Ian, I'll let you go first.
I try not to make predictions based on when other people would do things. I'm not being flippant either. I just try not to do that. I only will give a statement on something if I know that I have a high probability of being right. But the reason why people are terrified, and I think the savings rate should be at 19% on average. But when will the market, unfortunately, when everything settles in about 2021, end of 2021, early 2022, that's when a lot more people will go back in. But unfortunately, it will be at the highs. Okay. Like, this is the only spot where things can be Black Friday prices and below, and everyone is going to sit on the sideline. That's why I try and give the metaphors. Like if a house, if I can get you a brownstone right now for 100 grand in New York, everybody in Jersey, Connecticut, New York will hop on it. Here, people get terrified because sometimes you take in too much information. And then when people finally do start to buy, it's at all-time highs when we are like in February and early March. So I want you to have the context as well.
Okay. Yeah. And I think I just wanted to add on to that. It's interesting that you say that because not only are a lot of money sitting on the sideline for just regular people, but institutions as well. There's trillions of dollars on the sideline right now for institutions. So a lot of people saying that the market is inflated, which is interesting because it's still lower than what it was in January. And there's still a bunch of money that's still waiting to be deployed. So, I mean, we can't predict the future, but I'm not really so much pessimistic because I look at it like everything that's bad is already factored in.
Mm-hmm.
You know what I mean? 2020 is over. 2020, the year's over.
This one's over.
The year's over. Actually, like if you 2021 is right now, like that's what you should. If you don't have your plan for 2021, you're screwed.
Or you should be preparing for it now.
No, you should have it.
Right, but some people don't, man.
No, I'm just saying you should
work on it this month.
Working on 2022.
Right, working on it. 2022.
You should be working on 2022.
That's true. That's true.
Right now, like if you wake up in the morning and figure out what you're trying to do for the day, you might as well go back to sleep. You should have known what you were going to do today, yesterday. That's a fact. That's a fact.
That's right. I agree. I just wanted to take that into account because I think the returns are still been doing well in a market that's really skimpy and there's a lot of money on the side. So I just want to elaborate on that question just because I was taking in a lot of information over the last couple of days and I didn't want to just overdo it in my head.
Nah, no problem, bro. Appreciate you, bro.
Yeah, and I'll say this homework for everyone else in YouTube and Zoom. Type to me what was the price of the S&P 500 SPY in 1993. Thanks to quantitative easing. Now, of course, printing of money devalues the dollar, but Mark, I see you. I'm gonna sip water for you. But the market historically always goes up, especially if you invest in indexes. If you want safety, for those of you listening at home, if you want safety, please just get index funds. You don't have to listen to us every week. Now, I would love if you do.
Please do.
But rinse and repeat. Less is more, and you're good. And then also go back and look at the Dow, and even just Google what was the price of the stock market in 1900, and look how much we've gone up over a 100-year period. It will make a huge difference. And once you see that historical rise, it makes it a lot easier. I know some people say you never know where the market is going to go. Listen, I wasn't that great at math. I wasn't the best student, but I somehow figured this out. And every piece of technology that we've ever had has went into hedge funds. So there is a rhyme and reason, a system. If I'm able to call where these things are going to go and when to buy, trust me, it's very doable. Just invest every single month in quality. You don't need more than 4. Rinse and repeat. In 30 years, you'll be absolutely happy. I promise you.
Appreciate you. Neo, we coming to you. Neo, it's a new name. Neo, unmute yourself. You've been unmuted.
Yo, can you hear me?
Yeah, we hear you perfectly. What's going on?
Oh man, just chilling, man. Just want to let y'all know, man. I've been watching y'all since the beginning when y'all used to do story time, man.
OG listener right there.
Yeah, I love that.
OG listener.
No, but I wanted to talk about the options, man. I haven't gotten into it yet, but I've been, doing some research, thinking about getting into it. But, also, man, y'all need to do Market Mondays on the podcast, man. I'm in my car a lot. It'd be dope if I could, because I saw y'all did the Mark one with the options study hall. I thought that was dope. So y'all should do Market Mondays and put them on the podcast too, man. That'd be dope.
I got a cash app you for that. Thank you for saying it. Thank you. Thank you.
Yeah, I'm gonna put that cash app in the chat. Matter of fact, don't cash app me. Let me get in the Red Panda Club. You know what I'm saying?
I'll let you hop in the league.
Cash app. I need the club. I need to be in the group. No, but my question is, when it comes to options, you have that strike price. So if you don't hit the strike price, or if it doesn't get there, like if there's like a minimum, right? Like what I'm trying to say is like let's say the strike price is 100 and you only get to like 95. Is that a loss?
No, that's a good question. No, because it's the bid and the ask. So the strike price is sometimes it doesn't really even matter because it's like let's say my position, I have XLK, right? I think I brought it like a 130 strike price. XLK is like at 108 right now, but I got it at 102. But I'm already up substantial. I think I'm up like 100 and something percent. Yeah. But it's the bid and the ask that you really have to pay attention to. Those numbers move, and it's on the momentum. So if people think that the momentum is leading towards that it can possibly hit 130, then more people's going to be willing to buy it. So now you're gonna pay a higher price. So as opposed to like $2 for the contract, now it might be at like $4 for the contract. Yep. So now you doubled your money, even though the strike price is not realized yet. Yeah. So I hope that's not too confusing.
Yeah.
But
I would say the easiest way to explain it to you, Neo, is it has to trend toward that strike price, right? So as long as it's trending toward it, you're going to be in good shape. All right. So if you bought it at 95 and it's trending toward the 100, it doesn't have to hit the 100. You can still make profit as long as it's trending. The trend is your friend.
And then it depends on how long it is too.
That's true.
Because if you got like
and where you bought it at.
Yeah. If you got 2 weeks, that's a different story than if you got 18 months. So, but to answer the long story short, no, it does not have to actually hit the strike price for you to make money. Yeah.
So basically, y'all still hear me?
Yeah.
No, I just like it's not a second question. It's just like a follow-up. So it's not a second question. Okay.
So no bad line for you?
Huh?
Running red lights. All
right, go ahead. Run the red light. Go ahead.
So basically it's based off of the timing, right? That's when, like, let's say if I had it for 2 weeks instead of 18 months and it wasn't trending towards the 100, I could lose.
Yes, absolutely. If the ask price goes down, you buy the ask price for $2 and it goes to $4, then you doubled your money. If the ask price goes from $2 to $1, then you chop your money in half. So based off of the trend, because sometimes it can even go up, but it can still go down.
Yeah.
So it's really the momentum and the trend of the ask and the bid. If it's going up, you're gonna make money. If it's going down, you're gonna lose money. Because like even when I had DraftKings at one point, it was actually over the strike, but the momentum was still going down. Even though the stock price temporarily was going up, the momentum on it was actually going down because nobody really believed that it was going to continue to go up, and it didn't go up. It actually went down. Yeah. So
a lot of the option calls we make are longer than 2 weeks or a month, so we can have the actual price can actually have a chance to trend. So if you're going to do like short-term option trades, man, make sure you do your research.
Be careful, please. Be very careful.
Very volatile.
Yeah.
Appreciate you, Neil.
But I would highly suggest that people invest in regular stocks first.
Because what? Yeah. Go ahead. My bad.
Yeah. No, I was just saying. I just think that you want to be careful. And there's a lot that goes into options. So it's not something that you just have to rush into. So learn the stock market first, index funds, tech, all of these things that we talk about before you jump into the world of options.
Yeah.
Yes, I'm begging you, do that even for those of you that are interested in futures. While you're getting your strategy and system down, you can be earning on the investment. That's why I told everybody to invest in long-term first. And then, so for those of you that were trading with me 4 years ago, man, send me a Christmas card this year because I've had you in Apple and Microsoft for a while, right? So you can be making money on the long-term side while you are learning how to trade. So please be mindful of that. And I know everyone wants to flip the bag. I get it. Everybody wants to get in quick. Man, I get it. But you will be a lot happier holding some of these companies for 3 or 4 years first, and you'll be good.
Yeah.
Yes.
For sure.
Sabrina, I've seen that comment. You're funny.
Cassandra, hey.
Michelle, you've been unmuted. Unmute yourself.
Hi, guys. Thanks for taking my question. My question is on options. I'm very comfortable with stocks. I understand that the options piece is an education. So I think I'm having trouble with step one because with all the research and even with you guys, Mark, and different videos, they go straight to definitions and not so much functional as far as setting up the account. I hear things about having to be approved. I don't understand why, because I know with stocks, you can just put your money in there and you're good, but I don't understand the set up the account and being approved part of it.
Yeah, you do have to get approved because they don't, especially if it's a reputable brokerage like Fidelity or TD, you know, options is not something to play around with. So it's like, you know, that says something right there that you actually have to get approved, and there's different tiers you have to apply in order to be able to trade options.
A certain amount of time you have to be in stocks.
I would use this as a rule of thumb. If you're not familiar with how to actually set it up, you probably don't want to, you're not ready.
Okay.
Nah, I'm just being honest, because that means that, you know what I mean, there's still some learning to do. And that's why they have that approval process to kind of protect people and protect themselves
from losing.
They want to protect themselves first and foremost, but also they got to protect people as well. Because you see what happened in Robinhood, the kid killed himself, rest in peace. That was an unfortunate situation. And he didn't actually even lose that much. It was a mistake in their system. But, you know, a lot of people, you never want to invest in anything that you don't fully understand. And there's no shame in just taking your time. So like I said, options trading is not for everybody. It's not for everybody. And until you fully understand it, I would not invest any money in options.
Yep. But everyone that wants to trade futures and options, write this down. 300 practice trades before you go live.
Where do we go with the practice trades? Is that on Robinhood? E-Trade? TD? Okay.
Yep. You have to practice first. Trading is the only sport in which people want to go right to the pros and don't practice. And if you ask any ball player, they practiced for 16, 17 years before they got to the league. I'm begging you, because I know it's fun right now to talk about trading. A lot of people are not telling you when they're having these massive 20, 30, and $50,000 losses.
Yeah.
I'm being real with you.
Yeah, and we have to be responsible too, because we want to paint a realistic picture. We just don't want to say like, this is how much money you're making in options, because it's like, you know, we have to have some responsibility as well. So that's why we try to just tell everybody that, hey, do your own research, and don't get into something that you don't fully understand.
Right.
Yep.
And I think that's important, because you know, we got to paint the full picture.
And even with that, no matter how much money you make on the trading side, I trade futures, right? So there's no amount of money that you can make short term that is better than the money that you're going to make long term. Go look, compare any Google, Facebook, Amazon, Tesla. Some of you have been in Tesla since 2020. Kudos to, I know you don't want me to say her name, but a lady in a stock club, her grandma, I believe, has been in Amazon since $30. Has not taken $1 out. There's no trade that you're going to hit that return on. Go calculate what Amazon is now and divide it by 30. Being real with you. Invest first, swing trade second, then intraday trade, or what I call in episode 70, short-term investing. I know it's sexy as hell to talk about the 10 grand, 15 grand. I've done that too. I'm telling you, the long-term money is better.
Take little money too. Like Matt, his first investment that he ever made was like $150.
Yep.
And I think his first option trade that he made was like $200, something like that. And Matt, you know, everybody knows he's, you know, a big time mortgage.
Matt, call me, man. I'm proud of you though for taking action.
Nah, he did it, man. Shout out to him. He got in the game.
There's nothing wrong with that either. Start with $100 or something like that. Like, you know what I mean? Just to kind of get your feet wet. I'm just using that as an example, but start with money that you can, you know, afford to, you know, it's not a big deal. You learn, and then you kind of just take it from there.
Yeah, like I said, being transparent is key. We took a loss. We tell you about all the losses we've taken. DraftKings, like I said, I'll let you know if I take the loss. It was my first one. But we're gonna be transparent, because how many people are out there actually showing their losses, right? Everybody posts their gains, but nobody talks about the losses. So we're gonna give y'all everything, the ups and downs, because we live in it right now. So that's the best part about it. Shout out to Mark. Yeah, the come up series. That's tomorrow.
And Trapping Tuesdays.
And Trapping Tuesdays. I think Trap was in here earlier. Shout out to our brother, Wall Street Trapper, Leon Howard. And shout out to Mark Monroe, the come up series. Y'all got to go tune into that. He said at 50,000, if that hits 50,000 on YouTube, the game will never be the same. I took a picture of it, and he put the date. He put the date on it so y'all can hold him to it. If that hits 50,000 on YouTube, The game will never be the same. That is his quote. We're going to Judy. Judy, unmute yourself. You've been unmuted. What's going on? Judy, don't do that.
Hello, you got it?
There
we go.
100%.
Right. Hey, I hope everybody doing good. Happy birthday, Ian.
Thank you so much.
I wanted to ask about how you feel about because my homeboy bought trading currency, you know, and betting against the GDP and that. And I had a long conversation with him about it today. So, and he was, you know, he's not making money, he's just making a little slow money, like $50, $100, you know, something like that, $100 a day kind of situation. But he was trying to, you know, explain it to me, and I just thought I'd bring it up to you guys today.
Trading has considerable risk. Please consult your advisors before you begin trading and any speculative investments. So anytime I mention a particular asset class, I get a lot of spam. So I will stay away and say I love everyone that has decided to engage in trading. That's what I'll say.
This guy's good. This guy's good. This guy's
so
media trainer.
He's not a fan of Forex.
I'm a fan of all traders. We are all family. That's what we're gonna do.
Thank you.
Yo, appreciate you.
Appreciate it. Shout out to the Forex community out there, all the multi-level marketing companies.
That's the part of it I hate. There are some people that do make money, and Forex is not a lot of them, but that component I hate.
Yo, and their spam, whoever's controlling their spam, different level. Yeah, that spam is, I've never seen it, man.
They've littered our whole page. Yeah. Every post is just littered with Forex spam.
DL, you are unmuted. Unmute yourself. What's going on?
Hey, how y'all doing? Can y'all hear me?
Yeah.
Good, bro.
Hey, man, glad to be on. Quick question for you. So I'm an educator, and so we don't have 401ks. We have 403Bs.
Shout out to the educators.
Yeah, appreciate it. So, but anyways, I was with the school system, and I wasn't there long, got moved, and I only had maybe $1,500 in. But the new school system I'm with, it didn't transfer, so I can't continue to invest in it. So what should I do with it?
Troy, what do you think?
He said he's in. I didn't hear.
He has an old 403B, but his new school system doesn't have a retirement plan. So
I mean, that happened to me when I left a school district and went to another one. I spoke to my financial advisor, and I was able to roll it over into.
Yeah, I'm gonna do it quick in the interest of time.
Yeah.
Roll over the old 403B into an IRA,
right.
Individual retirement account, and then you can start contributing out of your pocket. And the money that you put in up to $6,500, I think it is $6,500. I think $6,500. $6,500 is tax deductible, so you can take it against your income. So that's like the easiest way. If you still want to contribute money to your retirement, if your new job does not have a retirement plan, you can roll your old retirement into an IRA account, and you can put money into it on your own.
It's very important to know that, and I'm glad you brought that up for educators. A lot of times, if we switch school districts, like I was in the New York City Department of Education, I went to Westchester Schools. Even though it's in the same state, it's a totally different system. So I had to take the money out. A lot of people forget when they leave to take their money and roll it over. So I'm glad you said that, because literally that almost happened to me. I had some good people on my side that advised me to do what you just asked. So thank you for asking that, bro.
I appreciate y'all.
Appreciate you, bro. Let's take a few more.
Yeah, let's do it.
questions.
Let's do it. Let's go. Ryan, we coming to you. Ryan,
not to.
Good.
No, go ahead.
Ryan, unmute yourself. You've been unmuted.
Yo.
What's good?
What's good, brother?
Happy Monday, Kings.
Happy Monday.
Peace.
My question, I've been seeing that the tech's been kind of holding the market up lately, right? And I know that we advocate holding on to index funds through the S&P 500, But being that tech is been doing their thing, should we think about NASDAQ as well?
Yeah, so technically when I say indexes, I mean all of them. So S&P 500, Russell, Dow, all of the ones in the United States. So I would do Dow. If you're looking for NASDAQ, I would do Qs as well. So either TQQQ or regular QQQ, and you're fine. But if you only do tech when we have a downturn that is really violent, for those of you that trade NASDAQ futures, I salute you. The downturn is a lot heavier. So I want you to be able to hedge and also take in consideration age. So if you're 40 or over, you want to, well, let's say 45, you want to start to taper back and look for a little bit more safety. Because if you have 1.2 in the market and you have a 30% haircut, it's not fun. And the thing that what happens with losses, we all know what we should do. We all know we should ride the market out, but you get down 25% and you're like, I don't want anything to do with this anymore. Emotions kick in. So make sure that you have a mix of both and you'll be good.
Yeah, that's good. That's good advice, Ian, because you always want to diversify. And the S&P 500 is a hedge because it has more than just tech. So at some point, tech will correct itself as well. So you never want to put all your eggs in one basket at any point in time. So something to think about. But thank you for your question.
Appreciate you, Ryan.
Appreciate you.
You call it. Which one you want?
Cameron,
what's going on? Unmute yourself. You've been unmuted.
Hey, how's it going, everybody?
Great. How are you?
I'm great. So my question is more so of a trend question. I read something this week. It had to do with the raise in diabetes rates. Seeing that, you know, fast food is taking like such a spike. I'm sure y'all seen what's happened with McDonald's and Wing Zone, but my question really is about kind of stocks that benefit from that trend, whether it be LVGO or DVA, DaVita or Livongo. And do y'all believe in that long term, or is that kind of just a short term hedge play?
BBAs and British Alpha?
Oh, DVA, I'm sorry.
DBA.
Yeah,
DaVita. David Bryan Adams.
Did I? It's my bad. Am I like my bad? It's DVA.
Agricultural Fund.
DaVita Incorporated.
Yeah,
I'm gonna type it in chat.
Yeah,
DVA. DaVita is good. And what was the other one you said?
Livongo, LVGO.
LVGO out of here. Yeah, like LVGO looks like check. What you guys have been typing about in chat. LVGO is amazing. Yeah, both of those.
So both of those?
Amazing.
You love to hear it. All right.
I'm gonna say it one more time. Amazing.
All right, cool. Hey, shout out, love from the DMV.
Stock Club members. Amazing. So
appreciate you, Kim. Yeah. A lot of people have been typing about check. Check is solid. That's one of the things I'm looking at this week. I literally just said that to Jamal. Two stocks I'm looking at: Qualcomm and Chegg. Qualcomm, obviously, because of the 5G technology that's coming, and I know they're gonna be part of that. So I love Qualcomm, and I'm definitely looking at Chegg. Obviously, with schools trying to reopen and not figuring out a plan, and people having to submit plans by the end of this month, and none of them really look concrete. Online learning is going to be here, and plus they have other services as well. I love Chegg. I'm definitely looking into that this week, and Qualcomm.
Shout out to HK on the super chat, $50 super chat. It said first time option play made 50K using Robinhood. I sold and cashed out. What happens with Uncle Sam? You will have to pay taxes.
That's what happens.
Yes, you get a 1099 at the end of the year for your earnings or your losses, whatever. And that's another thing with trading is capital gains, short-term capital gains versus long-term capital gains. We still have to bring an accountant on here to do a tax.
Yeah, we're gonna do that very soon.
But the short answer is that you have to pay taxes.
Yeah, and then for my guy,
unless you're Derek Grace.
That's funny.
Trump Pat.
Shout out.
Post Trump Pat.
Post Trump Pat. Shout out to Derek.
Yo, appreciate you. Jonathan.
Derek Grace, he's doing a documentary how he's making $15 million this year and he's not paying any money in taxes. Shout out to Derek Grace. American.
Hey, what's up, guys?
What's going on?
Oh man, pretty good, man. Yo, thank you so much for what y'all guys are doing. Everything y'all bring out there, it really works. But I wanted to ask you a quick question on ETFs and your views on listening to Mark.
You breaking up?
That just wanted to get your views on that.
Say that. Can you please say it again? You broke up.
Well, your views on doing option trades on ETFs.
If you have options is the wave right now. Everybody on options.
Yeah. If you have experience, how long have you been trading?
So I've been trading for about 3 years, and I'm kind of winging it. And I'm just like, maybe I need to invest in myself and kind of join the stock club. I've been the one that's been annoying you on Instagram. So I think like you actually motivated me to just put up the money and get into the stock club.
You're never annoying. You're persistent. I appreciate it. Right?
I'm trying.
But go, and I'm gonna let the fellas chime in because I'm great at futures. I'm not a master of all. But the further you go out, the better, especially with the ones in the stock club and the ETFs. But I'll let you guys fire away.
Yeah, a wise man told me this by the name of Bruce Wayne. He said, look, man, ETFs is a better play only because there's so much volatility and so much risk if you're doing a single stock trade, a single stock option. Find an ETF that has the stock that you like, because it's going to have probably more in that same sector. So ETFs is a safer play, which was told to me. So I've been following that, man. Shout out to Bruce Wayne.
Yeah, and this is the same thing in the futures market too. Like we trade ES, Dow, Russell, NASDAQ, same thing. So, and then when you go further out, that's like for everybody in Red Panda, it's like an extended swing trade. So the short-term trades, I would say stay away from because your accuracy has to be incredible. But if you go a little bit further out, you'll be good.
Yeah, cool. ETF, Mark definitely is a fan of ETF trades on options. So Mark told me to do it.
And I'm sorry, one quick thing too, right? If you don't hit your strike,
hold on, guidelines.
Time out. All right, cool. All right.
Go ahead, bro.
Are you good? Go ahead.
No, so if you don't hit your strike price and you want to get out, do you lose the premium?
300 practice trades. Let me give you context. The reason, if you know me, I have money taken from me. I went all in on futures trading. The reason and the way I got good at this market is I didn't want to have to depend on anyone. So I know the easy answer that you want right now is going to be good for now. It won't help you later. I swear to you, if you put the time in, you won't ever have to ask anybody any questions ever again. So it's either short-term sacrifice. For all my traders, if you feel me, like type yes. But I never ask anybody their opinion on any stock, any trade ever. That's because I put 12 hours in. I saw every day. So I know most people can't do that. But if you do that, I promise you, it's no different than me telling you putting up 300 shots a day. And if you want to go to the league, it's no different. It's no different. I am begging you from the bottom of my heart, 300 trades to this day, with all that I know, as well as the stock club is winning, as well as trading went, I still think I underperformed. I'm at it every day. Not a day that I miss. Cool. So I hope that helps.
Nah, thank you so much. Appreciate it, guys.
Appreciate you, Jonathan.
Appreciate you. Yes. First of all, YouTube, if you could take a minute and like this video, please like the video. We greatly appreciate it. Shout out to everybody that tuned into Market Monday. We had a phenomenal show.
It's a record, right?
Yeah.
3.2?
I think so.
Y'all amazing.
Yeah, it's a record, right?
Yeah, we got, yeah. Oh, yeah. There's a couple things I want to say. First of all, don't forget, we got a dope episode coming out tomorrow.
Solid.
Ernest Dukes, he's a PR.
Oh, I'm excited for that one.
Yeah, he's a public relations guy. So check that out, EYL and EYL University. You know what? I realized that everybody, this options thing is just going crazy. So we're going to do a class on EYL University about options. It may be an open enrollment class because I'm noticing a trend here. And,
the trend is your
I just want the options people just to have, something, just focus on that because I feel like there's a lot of other people that's not at that point yet.
Yeah.
And I don't want the conversation to be overpowered by options. I like that it's diverse and we're not talking about the same thing every week, but I just want, people that, I don't want people to feel intimidated either. Like if they're not interested in options right now, if they don't know enough about options and they just want to start investing, want to kind of give them an opportunity to ask questions as well. So I think that a class would be.
And I'll say that when y'all take the class, for those of y'all want to trade, because some of us make it look easy, right? You're going to have to learn charting and you're going to have to put in work. So if you're not going to come and put in the work, don't do, I'm telling you, just invest, sleep well. If you're going to put in work though, it'll be a lot of fun.
Yeah, for sure.
Yeah, and we got 2 episodes. We got episode Friday too.
Oh yeah, Friday. Ladune, shout out to him. DJ Envy's business partner. My God versus my enemies. So yeah, that's gonna be dope as well. Ian, what would you like to tell the people?
If you guys want to join the stock club, you can join us at joinredpanda.com. For everybody in the stock club, if you've gotten decent results with me, put hell yes in YouTube and in Zoom. If you want to learn how to trade the futures market, you can join us in Apex One. I am begging you, only join if you're going to come and put in the work. By work, 2 to 4 hours a day, every single day. So this is no get rich quick anything. You're going to have to work. If you don't want to listen, don't join. I love you. And just stay on that side. But joinredpanda.com for all updates. Come join us. And then thank you guys for an amazing week. For the stock club members, I love you so much. No meeting tonight. Check Telegram. I dropped a fire video. And thank you guys for believing, because I know some of you did not know me in March. And I hope that I was able to give you some insight and change your lives for the better. And I hope I've been a blessing to you.
A blessing to be a blessing.
It's a blessing to be a blessing, in the words of Chris.
And
shout out to him.
You know how we always end this, man. Reach out, call somebody.
EYO University. Once again, we got Matt tomorrow at 1 o'clock, and we have a class on higher education, the change dealing with COVID, as far as financial aid and all that stuff. So check that out on Wednesday, and then we got a construction class next Wednesday, and we got a bunch of stuff. And study hall, yes. Micro clips will be released on audio.
We're gonna get that Market Mondays on there too, baby.
Do that.
We're working on it.
That's a fact. And EYO University, the price is going up on August 28th. So if you're interested, it's 40% off right now with code earners. And the reason why we're raising the price is that the value keeps going up, because we keep adding to it. So it's an ongoing thing. So in order to keep it fair, and we want to keep it like the Zoom situation where it's just like, we got to kind of keep it fresh. So yeah, we've raised the value, because the value just keeps raising itself.
Fact, right?
So if you're interested, it used to be $100.
That's a fact.
So it's like, even now
for the year.
For the year.
Man, if I knew that, I would have been major already.
I'm saying,
luckily I ain't over marketing, man.
Yo, it was $100 for the year. Now it's $250 for the year, but it's like
that's still
a steal with the discount. And it's like, if you don't invest in education, then as Derek Grace would say. I'm not even gonna say what he would say, but we gotta keep it. We got
casualties.
Yeah.
Yo, on a serious note, man, you know how we end it. We love you all. Reach out to somebody. It's a trying time right now. Obviously, we've seen what's happening in our country. Unemployment hasn't been extended just yet. A lot of people are going to be in financial hardships. I know rent is now having to be paid. So, a lot of people in trying times. So reach out, call somebody. If you can in a position to help somebody, please do that. We love you all. We hope to see you and pray to see you next Market Monday, man. We love y'all. Have a good night, y'all. Peace. Ian, we love you, bro.
Peace.
Love y'all too. Peace.
Love is love.
Invest every single month. I'm begging y'all, please. Invest every single month.